Hi guys, a very good morning to all who are joining us live on this broadcast here at Moneycontrol. You're watching Opening Bell with me, Stacy Pereira. And let me get quickly a recap of where we left off trade yesterday. Well, considering the kind of high volatility ahead of the exit polls and then finally the election outcome and the results on June 4th, market participants perhaps are going to see much more volatility. Yes, it's the start of a new series, but until and unless these big events are out of the way, we are going to see that kind of jitteriness within the markets, and perhaps participants would be advised best then to avoid making any kind of aggressive bets either sides on the initial days of this new series. And everyone's been talking about the fact that make it more of a stock specific approach than also looking at the index at this point, because yesterday we did leave off the Nifty there below that 22,500 levels, and perhaps that can go on to become that main support levels for the Nifty at this point till we are done with all the other externalities that could go on to impact the Indian markets. Of course, today we also have the big GDP number that is going to be coming out later in the evening, and then markets would perhaps also react to that come Monday morning. So we'll have to wait and see how these overall cues really work towards what the market is telling us. Let's discuss all of that and more, but before that, let me take you through all the top headlines. Now, Wall Street corrected ahead of those key inflation data numbers. The Nasdaq led the losses, ending over 1% lower, a 20% correction in Salesforce on the back of its revenues missing leads the Dow to lower by, and the S&P 500 also was lower by about 0.5%. Asian markets have opened largely higher, shrugging off a weak handover from Wall Street. The GIFT Nifty 2 is suggesting a starting in the green for the Indian markets. Brent crude falls to under $82 a barrel as US gasoline demand remains soft despite the summer driving season getting underway. Gold prices, on the other hand, have been slightly higher as the dollar and treasury yields have dipped. All eyes will be on the GDP due to be released later this evening. Economists suggest that the fourth quarter GDP could come in somewhere at 6.8%, while the full year GDP growth is seen to be around 7.82%. So let's get going and discuss all of these stocks and strategies that you can apply in this new series that we are starting with. Milan Vaishnav, the founder and technical analyst at ChartWizard FZE, is joining me. Good morning. Always a pleasure to have you with us, Milan. Right up, we've seen Nifty try and do these different kind of stunts over days, but yesterday specifically we would say it tested even those 20-day simple moving average, closing around those. Do you see some more possibility of the index rebounding now from these levels, now that we've reached the fag end of the election, the phase 7 of the election as well? Or do you think this could act as a general support level for the Nifty, and perhaps it could also test the resistance at 22,700 or 800? Is that likely, or are we going further down from here?
Well, good morning, Stacy, to you as well as all the viewers. Now, stunts, yes, that is something Nifty is going to perform even larger and bigger stunts over the next 2-3 sessions. Now, coming down as a technical setup, there are two things that I see happening. One is that going down the line over next 2-3 days, we will see technical levels getting defied. So it may not hold exactly the supports that we see on the charts. It may not take note of the resistances that are present on the charts. But by and large, I see that we are off by around 600 points from the peak. And so on a relative term, we are going a little bit light into the market. FIIs are little net short. So far as today's session is concerned, I believe that we have some room for a short covering, and we can see some minor limited relief up move that might happen during the day. Now, that being said, if you take a look at the options data, zoom out a bit and take a look on either side. So I see that there is a lot of call writing getting done at 23,500, and a lot of put writing is also being seen at 22,000 levels. So what I believe that beginning Monday, we will see volatility increasing even more with markets reactions on the exit poll. And Tuesday, we will have the general election results. I feel that market participants are preparing for a 6 to 700 point of moving Nifty on the either side, and that's where I see the Nifty. If we try to quantify the volatile move that we can expect, so 5 to 600 points on the upper side, and similar move on the lower side is what is expected from the market if we go by the options data as of now.
Milan, what about the bank Nifty? Because there also yesterday we saw like a bounce back, couple of days of correction also went into it. Yesterday about 181 points rise that we see. We are still at that 48,600 levels there. Do you think the bank Nifty will be playing almost an opposite game to what we are seeing the Nifty? And are there specific components that look interesting within the bank Nifty, and what would those be?
I believe, Stacy, that Bank Nifty may not play the opposite game, but it will play a resilient game for sure. Because if we look at the relative strength, Bank Nifty is showing a stronger relative strength as compared to the Nifty. And if you talk about the levels, I feel that it is in a very broad trading range of around 1200 to 1400 odd points. The most immediate resistance is at 49,200 to 300 levels. So unless it moves past that level, I'm not expecting any sustainable runaway kind of a move taking place in Nifty Bank. And to have a sustained directional bias, it will need to close above 49,500 levels.
It's so interesting. They're not divergent themes, but more interesting what we're seeing how the Nifty Bank really play out. Milan, do wait on with us, and also to all our viewers who are watching, sorry about that audio glitch that we were facing, but do keep sending us your queries and we'll try and get them answered by our experts. Let me also take you through quickly a couple of stocks that will be in focus today. Now, we did have Apollo Hospitals that came out with its numbers yesterday. We saw the consolidated year-on-year numbers, the profit spiking close to 77.5%, coming in at 258.4 crore rupees versus a 145.6 crores. Revenues have risen by a good 14.9% at 4,944. Of course, you do have a couple of brokerages that have come out with reports. Morgan Stanley has come out with an overweight call on Apollo Hospitals. They've put the target there at 7,181 rupees per share. They say that the consolidated revenues that have come out close to 15% higher have been led by the HC Services as well as Apollo Health and AHLL. The consolidated EBITDA after the 24/7 costs was somewhere around 640 crore rupees, which has been in line with estimates, whereas as of March 2024, the company has seen a consolidated debt of somewhere around 1,500 crore rupees. So that will be interesting to see how these counters do react. Another one of that, and since we're talking about Apollo, maybe in the same basket, we could also look at pharma stocks. A couple of news points that are coming in there for counters like that of Sun Pharma as well as the others. In the latest enforcement report by the US FDA, in fact, the US based unit of Sun Pharma is going on to recall a couple of their drugs that they've put out. Now, some of them have been asked to be recalled as of April, whereas another recall has also gone in for a couple of other stocks, in fact, that we are seeing. So this is definitely not going to play out so well for the pharma index. In fact, Dr. Reddy's laboratory too has asked for a recall of 1,176 bottles. This is of their immunosuppressant medication. So both of these will perhaps see some bit of impact when you come to how the stock really goes on to react to this kind of news flow. In fact, Sun Pharma also has better news flow where it's saying that it has accepted that preferential offer to acquire about 14.28% of shares from IFQM. And remember, IFQM is the Indian Foundation for Quality Management. Milan, we barely have a minute to go before market opens, but maybe I'll get your view on the whole pharma pack and which stocks are really looking interesting there. We thought that the pharma is seeing a good run up, at least with what we saw in terms of their earnings so far. It did seem interesting, but how would you look at particular counters within the pharma space, and what is looking actually attractive to you?
So far as Nifty Pharma Index is concerned, if it moves above 19,300 levels, I'll be seeing a very serious and sustained breakout taking place in Nifty Pharma. And if you talk about any stock-specific views, I would be looking at Dr. Reddy's, Cipla, and Lupin, and Glenmark.
For you, there is Dr. Reddy's, Cipla, and Lupin. Glenmark as well, I think. So quite interesting four names that you've given us there. So we will get back to how people would want to play out these particular counters and how they are really reacting to the news flow. But there we are at market open on your screens, opening in that positive, in the green, we could say, at least the Nifty above that 22,500 level. So good 0.5% of gain, and we had GIFT Nifty did indicate that gap up start, not entirely gap up, but a good 100 points that we are seeing on the Nifty, at least at opening. So 22,500, we managed to get to that barrier and hopefully take that along through the trading day, whereas the sensex also seeing a good 300 points of gain. So 74,100 levels is what you're seeing on the sensex as well. Bank Nifty too seeing more than 0.5% of gain. So Bank Nifty there at 48,900 levels, and that's what we were talking earlier with Milan as well about how the Bank Nifty is perhaps going to see more momentum compared to the benchmarks at this point. Then the components for those also really holding out. Even the broader markets for that matter, the Nifty Mid Cap Index also, they're quite comfortably over 0.7% of gain for the Mid Cap Index. So that one also very nicely poised at 51,700 odd levels, about 350 odd points that it is clocking in. Same with the BSE Small Cap. 290 odd points there that it has gained more than 0.5% right at opening. So let's see which are these stocks that are actually making it to the gainers and losers list today. In this session that we've managed to snap that losing streak, we would say at least 5 days of corrections that we went through. But you have Apollo Hospitals, and we were just discussing this, 3% of gains coming in there for Apollo Hospital. That good 77% on the bottom line is what is propping up that particular stock. Adani Enterprise too, about 2% of gain. M&M also on that news flow, and there have been a couple of brokerages that have come out with buy calls on that particular counter. Adani Ports, Shriram Finance, as well as Bajaj Finance, they're making it on your gainers list. You also have Bajaj Finserv, and both of the Bajaj twins have been among your gainers within that NBFC and financial space. L&T and Divi's Lab also making it among your top gainers. Let's look at the flip side then, and the top losers in today's trade. Well, the likes of an Infosys, and today this does trade ex-dividend, so you're going to see some bit of pressure there for Infosys. Maruti Suzuki as well, seeing almost close to 1% of losses. Eicher Motors is another one within the auto pack. And remember, we are at the end of the month, so we are going to get auto numbers coming in, and so you're seeing most of those components there making it to your laggard list. Hero MotoCorp as well as Tata Consumer Products there among your laggards. And for the auto pack, in fact, we will see perhaps a flip side once we do see that data trickling in tomorrow. But it is how it has been reacting. In fact, yesterday Hero MotoCorp did have some positive news because one of its subsidiaries is looking for an IPO, and that one really propped it up. So perhaps some profit booking that you're seeing on that one counter. Let me go back to Milan and get his view quickly first, then on the indices and how those levels that he was charting, and whether we are comfortably poised to be tracking those on the charts as well for both the Nifty as well as Bank Nifty. Milan, do you think the strategy still stands the way we've opened up with quite a positive momentum at this point?
Yes, absolutely. On closing basis, at least as of now, I won't be speaking for Monday and Tuesday because we are as I just said before, bound to see sharp volatile moves. But as of now, Nifty will have to keep its, maintain its levels above 22,400. That's where the 50 DMA lies. And as of now, yes, the markets have seen a positive start, and we might see some short covering getting extended as well during the day. For today, it will need to keep its, levels above 22,500 at least.
So keep your levels about 22,500 for the Nifty, and you might see that short covering happen once again. We saw that happen through this week as well at particular counters. But Milan, do stay on with us, and we try and get a couple of queries answered as well from the viewers that are sending in. But another important news point that I would like to point out right now is that of Jio Financials. That one's going to be interesting since we saw a couple of NBFC names there among your gainers. Jio Financial will also perhaps be all propped up. That's because it has gone on to announce a launch of the Jio Finance app. This, of course, in its beta version, it will go on to integrate the digital banking side of things. They are going to be helping you out with your UPI transactions as well as bill settlements. The insurance advisory that it has will be putting out forms. So that's a beta version of this is definitely something, a news flow in the positive direction for that particular counter, and we'll see how those really react. Even you're seeing that positive there, but maybe not to the terms of the likings of what we would have expected with this kind of news flow. Let's also talk about another interesting development that will happen today, or which will get into effect today. That is of the MSCI indexes and the rejig that is to take place for May. Now, this will come into effect from 31st May, that is today, and post closing, you're going to see Canara Bank as well as JSW Energy among the three largest additions into the MSCI Emerging Market Index. And now remember, Indian equities are expected to see an inflow of close to $2.5 billion with this kind of rejig that it does. The global passive funds too have been putting in their portfolios. They're designed in such a way that they gauge the MSCI global standard indices, and that's why you actually have these kind of inflows, or you can expect these kind of inflows, whereas India's weightage in the whole MSCI Emerging Market Index too has grown to somewhere around 18.8%, and it's quite a significant leap, one would say, from just about that 8% it used to be back in 2020. So there we are seeing most of that growth coming in, and in fact I'm going to be discussing this in detail with my second guest on the show. I'm joined by Dhiraj Reli. He's the MD and CEO at HDFC Securities. Good morning, Dhiraj. Always a pleasure to be speaking with you here at Moneycontrol. Dhiraj, we're talking about how this MSCI rejig happens now and then, and we are expecting these huge inflows to come post the election results. We also have you're awaiting the bond index inclusion as well, and we're hoping a whole host of inflows because of that as well. How should one really be reading the India story at this point? Of course, there are the near-term volatility that we can expect, but with all of these broader news flows that are coming in, where does the India story, what does that picture really look like?
Good morning. I think India story is a great story, irrespective of whatever the outcome of the elections. I know it has become over a period of time cliche that election will come and go and it will not have any impact on the markets. It will have impact on the markets because markets are expecting the incumbent government to continue, and continuation of policies have major repercussions on how the economy and outlook will be for the markets. So to that extent, yes, it has short-term, mid-term repercussions for sure. India markets are doing well irrespective of the governments. I was looking at the data of UPA performance and NDA performance. I think in last 4 terms, economy has done very well, though the NDA terms have been seen as more pro-reforms and structural reforms and positioning India in a different level only. So to that extent, the markets would definitely like to have a continuation of policies. This MSCI rejig and inclusion of 13 more stocks and getting $2.5 billion inflows, this is positive for the market. I think for the bonds, the inclusion is on the anvil, and that's where we are seeing already more inflows from FPIs, whereas in equities, we have been witnessing negative flows, in fact, outflows. In this month alone, FPIs have sold for at least 25,000 odd crore. But if you look at the bonds, they have infused close to 7,400 crores. From that point of view, I believe the bond inflows will continue, and FPI inflows will be better after the election outcome.
Right. In fact, Dhiraj, you're talking about FPI outflows, but the domestic institutional investors have been pretty much doing that heavy lifting. About 2 lakh crore rupees worth of equities is what has been bought by DIIs in all of 2024. So that will be, something that we'll have to see whether that momentum is actually sustainable. Because just yesterday there was a report, in fact, from Jefferies questioning whether that is going to be sustainable and whether DIIs will be able to do this kind of heavy lifting. Would you also agree and concur?
I am not perturbed with the what's happening on the FPIs outflows. I think the FPIs will have to come to India and they will invest in India after this big event of elections are over. It's hard to miss India as a performing market. If you look at various reports, global reports, they are all looking at India as a sweet spot and an opportunity. So I don't think so any large portfolio managers, asset allocators can ignore India from that point of view. It's just about the timing. It's just about the valuation, comfort, discomfort they may have at this juncture. But coming to the domestic flows, we are witnessing, I think, dichotomy here clearly. Whereas, FPIs are negative about the markets, and whereas HNIs, retail investors, and domestic institutions are bullish on Indian markets. And this is also on the instrument which is used by the retail investors, SIP. I think that has proved to be a big, that has provided a big stability to the flows in the equities particularly. So we are witnessing almost 20,000 kind of crores in terms of every month throughput value in SIPs. If you look at it, the average ticket size here is still 2,341 only. My take is that not only the number of SIPs will grow, but also the average ticket size will grow exponentially. So this 20,000 crore number can easily go to 50,000 crore kind of numbers in next 3-4 years time. So this will provide a lot of stability in terms of flows in the market as far as domestic flows are concerned. If you look at the response on a couple of NFOs that were there in the market by large AMCs, and one NFO is going on for SBI AMC also, I think the response have been good even in the thematic NFOs also. So there is a greater participation happening in the market. Equity as an asset class has found more favor. This is what I call it as equitization of investments. So everyone talks about financialization of savings. I think that is one theme that has played out and is playing out. But over and above financialization of savings, equitization of investment is also happening. And this is because of our demographics, risk appetite of people, and as well as performance of the markets in last few years, particularly after COVID.
Right. So equitization of the markets is what we are heading towards. And, Dhiraj, not to sound different, but we've been hearing that, in fact, even from most of our politicians in this run-up to the election, saying that, you're going to see the stock market really boom post June 4th. We've heard that from most of them from the ruling party at this point. But let me quickly get a couple of queries answered. Let's get one from Alex. He wants to know the view on Hind Copper and any chances of dip in copper prices. So, Milan, what would you advise him on this particular, rather, what are the charts saying for Hind Copper? And are we seeing any kind of dip, because it did touch some new all-time highs as well when it came to copper prices?
My take on Hindustan Copper would be to stay invested, because right now what we are seeing is just a retracement within a structural uptrend, and that structural uptrend in Hindustan Copper as well as the copper itself remains very much in place. So I believe so far as Hindustan Copper is concerned, it has a support in the range of 348 to 358 rupees. That's where it can find support in event of normal retracement. but besides that, I would advise him to stay invested in the stock. This comes with a caveat that we need to discount the spikes that we may see over the next 2-3 days.
Right, interesting. Milan, another quick one, if you could get one on view on Suzlon Energy from a long-term perspective. That one also posted its earnings, saw some really great rally, but how would one look at Suzlon Energy?
Suzlon Energy is in a structural uptrend once again, as I will call it. It has seen a very sharp breakout once it moved about 12 rupees. So right now, if anyone is invested in that stock, one can stay invested and trail the stop losses higher to around 38 rupees. So if the stock slips below 38, then one would need to book the profits and move out of the stock. But apart from that, one can safely stay invested here in Suzlon.
Interesting. Well, let me shift focus back then to the broader perspective and how we are seeing what oil marketing companies, or rather crude, firstly in the overall picture, what that one is doing, because we had a report lately from Morgan Stanley on oil and gas, and they say that it seems quite well supplied, the whole energy market scenario. The SOE reforms should in fact go on to benefit the midstream as well as downstream players. They see monetization of the key projects should go on to benefit these mid and downstream players. Affordable gas is also taking center stage. They have picks like GAIL among their most preferred stock within the space, whereas HPCL, Reliance as well are some of the counters that they are looking at. In terms of fuel retailers and upstream players, they remain overweight on this on these particular counters as well. Maybe quickly a view on Dhiraj, your view on how to be looking at the OMC space and also in general the oil and gas space. Is there a room to be entering now, or there is likely one should be playing that wait and watch game when it comes here as well?
I think it's a wait and watch play, because we though at this stage we don't feel that crude prices will go northwards, but having said that, geopolitical tensions can bring in its own perils here. So my take is that it's a wait and watch. There are many more sectors that are available to invest, PSUs, banking names, and a few more sectors where FMCG in particularly, because we are going to witness a above long-term averages monsoon. I think the predictions are 106% by IMD and SkyMart 102%. So that makes alternate investment opportunities more viable in FMCG, banks, as well as in PSU space.
Right. So you're saying oil and gas may be a wait and watch game, but there are other opportunities within the FMCG and other consumption names perhaps. Milan, quickly a query to you, and maybe I'll also get the fundamental side from Dhiraj on how the whole realty basket and how that one is really acting out at this point. Rupak Mehta wants to know if one should be entering India bull real estate, and the overall what we are looking at with the realty index really perform, and whether there is room for entry in particular counters. So first give him the chart view of what India bull real estate is looking like, and then maybe Dhiraj can take it on the real estate space in general.
Speaking about India Bulls real estate, I feel it's in a good structural uptrend. Right now, it is seen consolidating in a defined range. I think one can stay invested and trail the stop losses higher to around 120 odd levels. So long as stock is maintaining its levels above 124, one can safely stay invested in this on the counter.
Right. So stay invested is what Milan is suggesting. So I hope that answers your query. But Dhiraj, to you, real estate, that whole basket, how is it looking propped up? At least all of last year, we would say that, this particular index did see a good turnaround, or rather we're in the middle of that turnaround happening within the realty space. Do you see any particular counters that you like? And, do you think there is more room, or we're going to see those kind of returns when it comes to the realty index as well?
I think the real estate sector has come out of the woods after a decade or so. It's just the start of the momentum in this sector post-COVID. People have started to own more residential properties, and we've seen commercial properties also doing well, with the India becoming office for the world and now heading to become even a factory for the world also. So from that point of view, I think it's just about the sector is on the cusp of doing well. South Indian based realtors have actually increased their realizations, so they per square feet realizations are also higher, and they are able to sell number of properties better, and even in the north, even in Mumbai, we've seen a good traction. So as a sector, I think is doing well, but one has to be very selective here. Go for quality play. There are good quality players who are available in this sector, so one can go long in the sector, but be very selective.
Right, can go long but be selective. There are particular interesting counters within the real estate space that you could be looking at. Let me also quickly tell our viewers about Muthoot Finance, because a couple of brokerages have come out with notes on that, but they did show a good number, in fact, in its Q4, where the net profits have grown by about 17%, coming in at 1,056.3 crore rupees versus the 902 crore rupees that it recorded on a year-on-year basis. The net interest income too has seen a good growth of about 15.2% at 2,134.8 crore rupees. Interestingly, CLSA has put a note on it, and they have an underperform call on Muthoot Finance. They've put the target though there at 1,700 per share. They see that the growth outlook is positive, but the valuations do still seem a bit expensive. The Q4 NII as well as PPOP is at 8%, which has come above estimate, but the PAT has been in line due to the higher credit cost as well as tax that has really not helped so much when it comes to that bottom line. The key drivers going ahead would best be for the strong gold loan growth of about 7% on a Q-on-Q basis, and the gold loan growth has been better than many of the other banks and NBFCs that are out there. Quickly, Milan, your view on Muthoot Finance particularly, and also the other names within this space when it comes to gold and jewelry. How are you seeing these counters really react to the news flow as well, where this is concerned?
I think speaking broadly for the other components from this space, I believe all of them are likely to take a breather. And coming specifically to Muthoot Finance has marked a classical double top resistance at around 1700, because it has tested this level, which was before tested in November 2021, where it marked a high of 1721 rupees. It was somewhere on 15th of November 2021. So Muthoot has made a classical double top resistance, and therefore until it moves above 1725, 1730 levels, I think it should be the time that we take some money off the table from this counter.
Right, so you can take your money off the table from Muthoot Finance as well as this whole space of gold and jewelry. At least these counters, having seen that good run up, maybe now it's time for a breather. Dhiraj, quickly to you. I know perhaps you won't speak stock specific, but Adani group of stocks, they've been seeing quite some news flow in the past couple of weeks. There were board meetings, the new fundraising plans that they've put out today as well. Your top counter is that of Adani Enterprise. How is one to be treading this market, because there's always news flow that drives people to be looking at particular counters, and is there something that is interesting happening within this space? Yesterday, of course, there were rumors about them looking, Paytm looking at whether Adani would want to invest within this stock, but of course those rumors were rubbished eventually. But how is one to be looking at the Adani group of stocks, and what would be your view?
I think the overhang of the negative news around Adani Group is almost over, and they are back at the same valuation or higher valuations. They are in almost all interesting spaces, growing spaces. So from that point of view, I think the Adani stocks will continue to do well. And if BJP and incumbent government wins and continuation of policies are there, of course, they will get the favorable, there will be a favorable outcome for Adani group of companies.
Right.
So that's my view. Yeah.
Yeah, that's perhaps the news flow or where you're seeing that kind of interest. It also did get included in the in the sensex, and we saw a lot of traction on those days where we saw that rebalancing take place there. Of course, that will happen eventually only on June 24th, but that news also really helping up the counters. Quickly, then I'll ask Milan his top picks in this news series, or rather stocks that he's finding interesting at this point, and why. If he could help our viewers with a couple of recommendations that he has.
Yes, Stacy, I would be going in with with a bit of a defensive stance in the market. I'm looking at two stocks. The first one is Hindustan Unilever. I would recommend buying above 2350 and expect the target of 2450 on the stock. I'll put a stop loss at 2300. The second stock that I'm looking at is Page Industries. I'm looking to buy above 37,950 rupees, and while keeping a stop loss of 37,000, I'm expecting the stock to test 40,000 over the coming days.
Right, interesting picks. HUL as well as Page Industries is what Milan Vaishnav has for us. Dhiraj, your last word then. What are the sectors that you're looking forward to? Given all of the external events that we are anticipating post June 4th or for FY25, if you have to talk about, what are those sectors that you think are going to be taking the markets in their next run-up?
I think one big thing which we need to understand is that this year monsoon will be good, and that will lead to a revival in the rural demand. So that will have a good impact, positive impact on the FMCG sector at large. So one can look at FMCG stocks, and also telecom is one such play where all headwinds are over, and there is a possibility of increase in the tariffs post elections, and that's where we have limited number of players there, so one can easily pick up the quality players and invest in telecom space. And also banks haven't done well. Some of the large caps, particularly if you look at it, they have not participated in the market rally, so there the valuations are also more comfortable. Whenever we will witness positive FPI inflows also, that will also be good for these large counters also. So one can look at these large counters, and selective names in the PSUs will continue to do well, though we witnessed that in last elections PSU peaked in couple of months time, but my take is that defense sector will continue to do well here.
Right, so defense within the PSU pack. You're also looking at telecom and FMCG. That's quite interesting, but I cannot let you go before asking you what is your take on the GDP data that is expected later today. Everyone's pegging those numbers somewhere around 6.8% odd levels, whereas for the whole year the forecast is somewhere around 7.8%. Would you think that it's going to come on those selected lines, or we could be positively or negatively surprised?
I think first time I'm seeing that there are huge divergence here by various large brokerage houses. Some are saying 6% and some are going up to 8% also. My take is that though the last quarter data would be lesser than the quarter 3, but it won't be disappointing, and we should be able to see the full year number at close to 7.8%.
Right, so you are also penciling in that 7.8%. That's quite interesting. Well, we're completely out of time at this point, so I'm going to have to wrap it up here with both my guests, Milan Vaishnav as well as Dhiraj. Thank you so much, both of you all, for coming on the show, for helping our viewers with their queries, and also giving us some perspective to be trading during these volatile times. But to all our viewers, well, we do have an interesting weekend lined up. We are going to get into the last phase of polling, so whoever is out there and has the polling opening tomorrow, please go out and vote is what we would request all of our viewers. And of course also stay tuned and glued to your screen post 5 p.m. because that's when we're going to have the exit poll results for you, or what they are really suggesting for the D-Day that is on June 4th. Well, with that, it's a wrap and a goodbye from the entire team that puts this piece together. Thank you so much for watching. Please do post us your feedback though, and also leave us comments and follow that link on the bottom of your screen for all your updates. keep coming back to moneycontrol.com as well as the Money Control app.